What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least $100 in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage app. There's a link down in the description box of the video. Go click on that Webull link. Open up your new Webull brokerage account today. Go get that free stock. Go get that free money. I'm going to also send you a free Webull tutorial video to walk you through how to make your first trade. All you got to do is DM me on Instagram at RichardFane28, and I'm going to send you that free Webull tutorial video. July jobs report came out on Friday, August 4th, and it was some good news in that report, guys. The market expected the economy to add 200,000 new jobs in July. The economy actually added 187,000 new jobs. And that's good news, because the Fed have raised short-term interest rates 11 times over the last year and a half in order to cool off this red hot labor market. So the Fed's policies are working. Now, some of you may ask, doesn't make sense to me. Why would we want our economy to slow down or cool off? There's one little word called inflation. So we got a red hot labor market and the economy is adding 2, 3, 4, 500,000 jobs a month. That's not good for inflation, because people make money, they spend money. And a lot of times we overspend. And that's where we get a sharp increase in prices of our goods and services, when there's more demand and not enough supply. So the Fed increases short-term interest rates to slow down growth in our labor market. How does that happen? Well, companies borrow money to grow. When interest rates are super low, they can borrow a ton of money, invest that money in growth, get a positive return on that borrowed money, and it makes sense for them to do it. If I can borrow it at 3% and I can invest that 3% in growth and get 8% growth, then it makes sense for me to borrow the money. So the Fed wanted to cool off the labor market, which they did. Now, what they did not want to do is completely shut the labor market down, because that would do what to our economy? That would stop people from spending altogether, because people would have a job. A lot of people would get laid off. There would be no wage increases. And you don't want to throw the economy into a recession. You really want a soft landing. And that's what the Fed has accomplished, in my opinion. Now, what are some other things that I got from the labor report that came out on Friday? Unemployment is 3.5%, guys. That's the lowest level unemployment has been since 1969, right? Wages, month over month, grew by 0.04%. Year over year, 4.4%. Now that's important. And the reason it's important is we want to slow down the growth of the economy, adding new jobs, which we're doing. But we don't specifically want to shut down wage increases. We don't want to do that. We don't want to increase unemployment. again, if people are not getting some type of wage increase and we got inflation at 4.8%, you don't have to be a rocket scientist to figure that one out. If my cost of goods and services went up year over year of 4.8%, but my wage increases on my job to compensate for those increase in prices didn't go up at all, I'm not going to have enough money to buy my basic needs. So we want wages. We don't want it off the Richter scale, but we want wages to continue to grow at a moderate pace. But we don't want to continue to add all of these new jobs to the market or to the economy, giving people the impression that they can just do whatever they want to do spending wise because they don't have any fear of losing a job. So there's a tightrope act there. And I think the Fed is doing a really good job walking that tightrope because they don't have a safety net underneath them, guys. They got to get this thing right because we need that soft landing. And that's where we're headed. Some of the sectors that actually added new jobs in July was led by the healthcare industry. They added 63,000 new jobs, followed by the social services sector with 24,000 new jobs added in July. What else did I get from the jobs report and kind of looking at some of the things that these financial analysts were talking about? One thing that jumped off the page was GDP for 2023. When you look at the first half of 2023, GDP is over 2%, man. That's gross domestic product. That means our economy has grown by 2% over the first 6 months of this year. The labor market is the reason why GDP is still growing, because people are still spending. And the only way people have the ability to go out and buy things and spend money is they got to have a job. They got to be getting wages on that job. So this whole recession thing that people keep talking about, I don't see that happening, man. Like I said, I see a soft landing. I don't see no recession in our future. The Atlanta Fed GDP Now tracker of growth in our economy is predicting for the third quarter alone, GDP is going to grow by 3.9%. Guys, listen, that's not a recession. Let me tell you when you need to start thinking about and planning for a recession is when you see that jobs report go the other direction, right? When you see that jobs report showing negative growth in new jobs added to the economy, when you see negative growth and wage increases, and you see unemployment rate go up, then you should start thinking about a recession, because those are the indicators, right? But with GDP at better than 2% for the first half of 2023, and then you got it being predicted that it will grow by 3.9% in the third quarter alone this year, that doesn't sound like a recession to me. It sounds like a soft landing, and that's what we want. So how did the stock market do when they heard the news of this July jobs report? Well, the stock market actually bounced a little bit on Friday, especially the Dow. Now, when I woke up this morning and took a look at it, it was, it was in the red. But that's not a big deal. You still had the Dow over 35,000 points. You still had the S&P over 4,500 points. And I think the NASDAQ was a hair under 14,000 points. So all good stuff, right? I think right now what you should be doing is concentrating on dollar cost averaging into your favorite ETFs. And of course, y'all know what my favorite ETF is, S&P 500 ETF. I also like the healthcare sector. Remember, I talked about the healthcare sector, and the jobs report added 63,000 new jobs. We got an aging population in this country, guys. So I like healthcare, but I like it in an ETF because that way I don't have to pick winners and losers. I go find me a really good healthcare ETF and I invest there. So that's my advice to you, man. You know, pay attention, but don't be sitting around trying to time the market because you think there's some doomsday recession coming. Oh, I'm gonna wait. Everything's gonna be heavily discounted. No, that's not gonna happen, man. The numbers don't lie. I'm telling you what the numbers say. The numbers don't say that's gonna happen. Now, I ain't got no crystal ball. I can't tell you it won't happen unequivocally, but I can tell you if you're looking at the numbers don't support it. So don't sit out trying to time the market and then all of a sudden you miss the whole market and you miss your net worth growth. Right now you should be dollar cost averaging in every single month, right? Consistently. Time in the market is better than trying to time the market. That's what we want to do. We want to be in the market instead of trying to time the market. If you want to see growth in your net worth. If you want them 12 free stocks from Webull, you got to click on that link down in the description box. You got to open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing to the channel. Share the video. Smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.